It started with an email. Interested in data? That's all it said. The journalists at Germany's Süddeutsche Zeitung get dozens of tips daily, but something about this one was different. No name, no explanation, just an offer of information and a warning that lives could be at stake. What followed would shatter global finance. 11.5 million documents, 214,000 shell companies, and the largest data leak in history. The source remained anonymous, calling themselves only John Doe. But what they revealed was a shadow world where corporations could buy secrecy itself, breaking laws without consequence. But to understand how this system was built, we need to go back to when corporations first learned to operate beyond the law. Bachar, the savings and loan crisis betraying the American dream. Savings and loan institutions were community pillars, trusted guardians where first-time homeowners secured mortgages and teachers deposited modest savings. Then came the 1980s deregulation wave and Charles Keating. At Lincoln Savings and Loan in Arizona, Keating transformed a traditional institution into a high-stakes gambling operation. He used federally insured deposits, taxpayer-guaranteed money to fund speculative real estate ventures and junk bond investments. But Keating's real innovation was purchasing political influence. The Keating Five senators, Alan Cranston, Dennis DeConcini, John Glenn, John McCain, and Donald Regal, received $1.5 million in campaign contributions to obstruct federal investigations. The human cost was staggering. Thousands lost life savings, communities crumbled, and taxpayers footed a $160 billion bailout. It wasn't just financial disaster, it was generational theft that betrayed the American dream itself. The Great Price Fixing Scheme, when competitors become friends. Mark Whitaker's journey from ADM executive to FBI whistleblower represents extraordinary moral courage. A biochemist with an MBA, Whitaker wore a wire during hundreds of meetings, exposing a global price-fixing conspiracy. The scheme targeted lysine, citric acid, and high-fructose corn syrup, invisible but fundamental ingredients in everything from soft drinks to processed foods. Executives from competing companies didn't see rivals. They saw collaborators in illegal pricing schemes. One recorded conversation captured their philosophy. Our competitors are our friends. Our customers are the enemy. They transform market competition into coordinated theft. With secret meetings in luxury hotels where executives divided markets like medieval territories, manipulating prices and stealing billions from consumers worldwide. The insurance betrayal, State Farm's systematic denial. Insurance is built on trust, the promise of protection when disaster strikes. For 6 years, State Farm betrayed that trust through strategic claims practices designed to deny valid claims on an industrial scale. The company created point systems rewarding adjusters who denied the most claims, developed software to automatically flag claims for denial regardless of merit, and distributed manuals instructing employees to lose documentation until policyholders gave up. One leaked memo advised, "Remember, if you don't write it down, it didn't happen." Over 40,000 families were affected, with average denied claims of $25,000. State Farm saved billions while leaving customers financially devastated, deliberately exploiting grief and desperation during crisis moments. Zacko WorldCom, the accounting apocalypse. Bernie Ebbers embodied the dot-com era corporate titan, a former basketball coach who transformed a small phone company into a telecom giant through aggressive acquisitions. Beneath the surface lay the largest accounting scandal in American history. WorldCom's special accounting unit was a purpose-built factory of financial deception. Instead of producing goods, employees manufactured financial illusions, transforming ordinary expenses into seemingly valuable assets. By capitalizing regular operating expenses, treating electric bills as capital investments, and maintenance costs as phantom asset purchases, WorldCom inflated assets while minimizing reported expenses. The $11 billion fraud required hundreds of compartmentalized employees and a shadow IT system generating false documentation automatically. When investigators arrived, they discovered massive shredding operations and digital crime scenes. It was corporate destruction engineered on an industrial scale. Nalpi, California energy crisis, market manipulation as economic terrorism. California pioneered energy deregulation, believing free markets would reduce costs. Instead, they created a playground for corporate predators. Enron traders didn't break rules. They rewrote energy trading entirely. Their strategies bore revealing nicknames: Fat Boy, Death Star, Get Shorty. These were sophisticated manipulation techniques, creating artificial shortages and driving prices to unprecedented heights. The Death Star strategy was particularly insidious. Traders intentionally scheduled power transmissions along congested routes, creating deliberate bottlenecks, then offered to solve the engineered problems for premium prices. Recorded calls captured sociopathic glee as traders celebrated manipulation. One infamous conversation had them laughing about elderly residents suffering during blackouts. Burn, baby, burn. That's a beautiful thing. It was economic terrorism disguised as market services. Auto industry emissions, technology as deception. The automotive emissions scandal revealed industry-wide conspiracy. Multiple manufacturers, including Volkswagen, BMW, and Daimler, transformed technological innovation into weapons of mass deception. Defeat devices were sophisticated software algorithms detecting testing conditions with remarkable precision. By analyzing steering patterns and atmospheric pressure, these programs identified official emissions testing with uncanny accuracy. During tests, cars ran clean, meeting environmental standards. On actual roads, they emitted up to 40 times legal pollution limits. Engineers raising concerns were systematically silenced or reassigned. One internal memo captured the mindset: "We cannot tell the truth. It means the death of our company." These excess emissions represented thousands of premature deaths, increased respiratory diseases, and accelerated climate change affecting generations. Wells Fargo, the banking algorithm of exploitation. Wells Fargo's fake account scandal represented terrifying evolution, technology, and aggressive sales culture combining to create systematic exploitation machinery. Their algorithm was a predatory tool analyzing customer data to identify vulnerable targets. Employee pressure was engineered financial coercion. Daily quotas demanded 8-10 new accounts or face termination. Success meant bonuses, even for fraudulent accounts. The technological sophistication was remarkable, meticulously constructed financial ghosts with deposits, activity, and fabricated email addresses. By discovery, the bank had affected over 3.5 million accounts, generating millions in unauthorized fees, while customers remained unaware of financial parasites attached to their legitimate banking relationships. Bechda Chemical Company Water, conspiracy poisoning public procurement. 3 chemical companies, General Chemical, Geo Specialty Chemicals, and Frank Reichel, transformed municipal water treatment into a calculated profit center through brazen price fixing. This was systematic deconstruction of public procurement. The conspiracy was sophisticated. Companies developed coded communication using Gulf terminology. Price increases became handicaps, market allocation became playing through. They divided markets geographically, creating monopolies in specific regions. When contracts were announced, companies coordinated bidding with deliberately low bids and intentionally high cover bids, creating competition illusions while ensuring predetermined winners. The scheme added $100 annually to water treatment costs for average families. Over 5 years, overcharges exceeded $1 billion, a tax levied through corporate manipulation of essential services. Media monopoly, Sinclair's editorial control. Sinclair Broadcasting Group created unprecedented media manipulation challenging local journalism concepts. They discovered legal loopholes, allowing control without violating ownership regulations. They invented sidecar agreements, complex ownership structures becoming manipulation blueprints. Sinclair sold stations to apparently independent owners contractually obligated to give Sinclair complete programming, advertising, and editorial control. On paper, separate entities, in reality, synchronized propaganda machines. The chilling demonstration came when dozens of local news anchors simultaneously read identical fake news scripts, revealing centralized control disguised as independent reporting. This was systematic erosion of journalistic independence. Trans-Panama Papers, the global money laundering machine. The Panama Papers exposed a comprehensive global financial shadow system designed to transform illegal money into seemingly legitimate assets. This was a meticulously engineered network involving banks, law firms, and shell companies. The process, called layering, represented sophisticated money laundering on industrial scale. Over 214,000 shell companies hid more than $32 billion through multiple jurisdictions, each transaction adding legitimacy layers. Codenamed clients, encrypted communications, and fabricated records were building blocks of transnational financial deception machinery. The global cost, $70 billion in lost tax revenue annually. Funds that could have supported schools, hospitals, infrastructure, and essential services. But the universal truth: corporate influence isn't just about money, it's about power to shape narratives, manipulate systems, and redefine boundaries between legal and ethical behavior. Each scandal reveals the same pattern. Corporate crimes aren't exposed by sophisticated investigations, but by ordinary individuals. Accountants, engineers, analysts, whistleblowers, who choose integrity over complicity. These aren't historical artifacts, but ongoing realities. The systems enabling these scandals haven't disappeared. They've evolved, adapted, become more sophisticated. The real question isn't whether more corporate crimes are happening now. The question is, who will be brave enough to shine the next light in the darkness? This isn't just a YouTube video, it's a call to awareness, questioning, and demanding transparency from institutions that shape our world. If you found this enlightening, like and subscribe. Share it with someone who needs to see it, and tell us in the comments what corporate stories we should investigate next.